Hey everyone, Happy New Year 2025. In the new year, I'm going to try and do some videos. I'm going to try and make some videos to give you some informative information about financial planning. So this is my first one. So like, subscribe, and keep watching the channel to see more. Today's video is about protection planning, critical illness. Okay, what is critical illness? And 5 things that you need to know when considering this type of policy. I'll try and be very quick because it's very cold out here. So critical illness is a policy that pays out a tax-free lump sum on diagnosis of a serious illness. Okay, very, very simple, very straightforward. You usually just put amount that you want to cover yourself for, and if you were to get one of those serious illnesses, it pays out a tax-free lump sum. The policy ends there. You're unlikely to get insured again for anything. So it's really important that, you know, you put enough in place so that it covers you and, you know, helps you. Usually you can put it for things like, you know, changing your house. If you had sort of a loss of a limb or something, you might need to have everything on one level. But it can really help people. And I've seen it happen. Anyway, 5 things that you need to consider when thinking about this type of policy. The first is policy documentation. What is a serious illness? What illnesses does that provide a cover? Read them, understand them, make sure you understand what's covered and what's not. Number 2, there are 2 levels of cover. Well, not 2 levels. There are 2 types of cover usually. Providers have split their critical illness into 2 levels, where they have a normal level of cover, and a more comprehensive level, usually referred to as critical illness plus or critical illness enhanced. Now it sounds like a bit of a cash grab, like, oh, get this critical illness plus or enhanced. This is the better one, more expensive one. But actually it is quite important to distinguish the 2. Because the enhanced cover or the plus cover usually either covers more illnesses or a more comprehensive range of illnesses. So these might things like, and don't quote me on this, but it might be as basic as, we cover for all cancers, but not skin cancer. But our enhanced cover covers for all cancers, including skin cancer. Okay? The more comprehensive level will cover more illnesses and also illnesses that are less severe. That's an important distinction to make. Okay? Number 3. Are we on number 3? I think I did 2 already. Number 3 is budgeting. Okay, so obviously we're looking at a critical illness cover which is going to be slightly more expensive than your usual death in service or life cover. That is because the likelihood that critical illness cover pays out for insurance providers is way more likely than it is for their life insurance policies to pay out, because you're more likely to get a serious illness and survive than get a serious illness and die, especially with modern medicine. So when budgeting, just make sure you understand that critical illness is going to be slightly more expensive. I would say that for £100,000 cover for someone in their 30s, it's going to cost something, between 30 and 60 quid per month. Okay. Number 4 is also to do with budgeting, but more about the different variables around it. So when you put in a critical illness cover in place, there are different variables, like, does it increase with inflation, so indexation, or does it include terminal illness benefit, or does it include child cover, which we'll talk about in a moment. So when you're looking at your budget, you can amend certain variables of the cover to change the level of the premium, but speak to your financial advisor about that. Okay. Last one, number 5. Now this is the most important one, I think, and the most overlooked aspect. Now the train of thought usually is you want to cover the biggest liability. So the person in the household that has the highest income, you know, provides the most benefit to the household financially, should be covered for more money, because if they get ill, there's a problem for the household income. You know, we're not bringing in as much money because they're ill, so we need that covered, which is true. However, people like non-working spouses and children also should be considered for critical illness, because if they get ill, then the likelihood is you're going to take some time off work, and that time off work isn't going to be covered because you're not ill, so you're not covered for sick pay or death in service or anything like that. You just have to take time off work, so it's just holiday pay maybe. So think about covering either non-working spouses or other people in the household, but also really consider covering your children as well. You can add child critical illness onto a policy as an additional benefit. It doesn't affect the policy if you make a claim. So if you make a claim on the child policy, it doesn't affect your policy, but it still pays out. It'll be for a lower amount than the main policy amount, but you can adjust that depending on how much you want to spend. Okay? So think about covering non-working spouses and children. Essentially, everyone in the household for critical illness. Those are the 5 things. That's my quick video. Like and subscribe for more content from me. I'm also on LinkedIn, and you can see all the posts and articles I write about financial planning. See you in the next one.